Marcia.
Hi, Steve.
It's part 2 of our how do you get started with GrowthForce video. What happens when we've got a new client and their books are a mess, right? A lot of companies come to us and they say, you know what, I know I can't trust my numbers, but I'm not sure what kind of state of the books are. You know, what percentage of our clients would you say come in here and their books are rock solid?
I would say about 15% of our clients.
1.5.
1.5.
So it's normal that the books are not going to tell you accurately what your P&L is.
Right.
So what do you do? Where do you start?
So we start with last year's tax return. We want to make sure that we have good beginning balances to start with. And then once we know that the correct ending balances are in the file, then we start with the balance sheet reconciliation.
Okay, so most CEOs that I know, they don't really focus on the balance sheet. They don't even know how to read it. They look at the income statement. So why do you start with the balance sheet? Why is the balance sheet important?
So we start with the balance sheet for a couple of reasons. First is to make sure all the transactions are inside of QuickBooks. So the bank and credit card reconciliations is where we start first. And then second, we look at the assets. We want to make sure that if you have any fixed asset purchases, they're correctly reflected on the balance sheet. And then vice versa. If there's any loans, loan payments that you've been making that might have been posted to the P&L, we want to make sure those are offsetting the liability balances on the balance sheet.
Because if your balance sheet is correct, that means your income statement will be correct.
Correct.
And that's the way you check it. So once you've got the balance sheet cleaned up, then what?
So once the balance sheet's cleaned up, we also do a review of the profit and loss. We look for any adjustments that need to be maybe posted to the balance sheet, like accruals. So we'll look at any revenue accruals that need to be made, any payroll accruals. We'll also look at insurance to make sure that that is properly reflected on the P&L.
So you know, sometimes we get clients who come in here with cash basis reports, right? They're using QuickBooks, the basics of QuickBooks, right? They're paying the bills, they're doing the billing, and they're making the deposits, and they reconcile the bank account. But they're not doing accruals, right? Why is accrual accounting so important?
So accrual accounting is important because you want to see how the business is performing from a month-to-month standpoint. If you're getting cash in one month and then maybe the next month you're paying out those expenses, you don't get a good feel of how that month actually performed. And so you might see spikes in your P&L.
And so you've got to run your business based on the bank account, right? The balance in the bank account. So if you're doing that, it sounds expensive to do accruals, right? I mean, what's a simple way to just get from cash to accrual accounting?
So it's really simple for GrowthForce in the onboarding department because we put those checks and balances in place. We developed this month-end checklist, which talks about the types of accruals we make. And really the number one is making sure that revenue is accrued in the proper period and payroll, because payroll is your most expensive cost for most small businesses. And so if we can match up revenue and payroll in the same month, then you're 90% there.
So you're telling me that if you have somebody who's got a bi-weekly payroll and twice a year they have 3 payrolls in 1 month, that's not going to, with accrual accounting, that's not going to have this crazy spike and a big expense that you didn't have?
Yeah, so we would accrue for that. So we would take, that 3-month payroll. Normally, a portion of that would be in the next month or in the prior month.
You mean the 3 payrolls in 1 month?
The 3 payrolls in 1 month.
Right. And now all of a sudden you're matching the timing of when income actually got earned with the expenses that were incurred to generate. So you have a real P&L every month.
Yes.
That's why accrual accounting is so important. That makes sense. What else? Is there anything else that we do to help if the client's books are a mess?
I think the biggest thing is really defining that month-end checklist to ensure once it's cleaned up, it stays cleaned up going forward.
I love it. Well, that sounds like we're making a really big difference in giving people actionable financial intelligence they can trust on.
Yes.
Thanks, Marcia.
Thanks, Steve.